Hey everybody, I'm Charlie Hurst,
And I'm Jaron Castellanos.
and we are a part of the Finance and Economics Club here at GCU.
And let's get into the daily report.
Yeah, let's do it. So we had major headlines over this weekend. Obviously, we had the United States and Israel teaming up and bombing Iran, which is not something that should be taken lightly. This is big news and causes the markets to be very volatile, as well as it causes a lot of fear, not just on the financial side, but just as human beings. And that's something that everybody should pay attention to and not take lightly. You have any thoughts on that too, Jaron? Anything you want to add?
Yeah, I think there's a lot of uncertainty in the market. A lot of people are pulling out of different positions based off news articles that are being dropped, as well as you also have a lot of these AI companies that are also starting to come out with new agents, new technology, and that's really been shown to bring a lot of volatility into these other tech stocks as well as the other parts of different sectors.
Yeah. So following that, the markets, they did crash on Sunday night. Not crash, but the Nasdaq was down about 1.2%. The S&P was down about 1%, and they rebounded fully. And now we are up on the week. We are very positive. Nasdaq was up about 1.3% today, which is about 300 points. The S&P up about 1% and 52 points. The Dow Jones about 0.5% and 238 points. And then Bitcoin up about 8%, crossing back above $70,000 to $73,000. So the markets are still rallying. Very interesting stuff, obviously, with the headlines.
Yeah, totally. I think recently what's been kind of the topic of discussion as we head more into 2026 is what's going to happen with AI, where is that going to be moving towards, and the sentiment on that. Obviously, there's been all these new headlines coming in with different parts of war, different parts of going out and acquiring businesses or even countries at this point, to the point where where are tariffs sitting at. So where would people start to look at maybe some of the safer options? Because a lot of time in the markets, people love to talk about the reward, but they don't often associate that with the risk that they took to get that. So where in the markets would you suggest would be a safer option for people to take a look at?
Yeah, that's really something that's very important right now. Obviously, you shouldn't be throwing all your money into a single stock or a single sector in general. Obviously, the safest thing proven throughout all of history is just putting your money in the S&P 500 and letting it grow. Or a lot of people like to keep their money in a savings account, but you won't get that 9% return that the S&P 500 yields. You'll get about a 3% return in a savings account. Obviously, the S&P is a lot riskier, but at the end of the day, the history shows that the S&P is a growing market because it is made up of the top 500 companies in the world. So I think that's probably the safest thing right now.
Yeah, definitely. I think, also from that perspective, there's, a lot of views on, AI coming out into the world and what that's showing for businesses, the growth, the detrimental effects of that. I was reading something and, I found some interesting information showing that, the CapEx that's fueling the AI is basically out of the 5 large hyperscalers spent around $400 billion in capex in 25, and these estimates are now looking at $540 billion in 2026. And although it is growing to this exponential amount, they are expecting a slower growth rate. Following earnings seasons where these companies highlighted huge growth opportunities that estimated is going to be around $666 billion just because of that. And in a few weeks, just because of that 60% growth instead of 35, I think that there is not a lot of people looking at kind of the the numbers and seeing anything concrete. Fluctuating from 35 to 60% in a matter of weeks, just based off some forecasts and some estimates, really shows, I think, some volatility and maybe some choppy waters as we're heading in later into the fiscal year. And I don't know. I'd like to kind of get your take on that as well. But I don't know. Just seeing how that's really shaping the market a lot. I think that there's going to be a lot of different parts of the market that are going to go up and go down as always, right? But seeing how, like you said this weekend, how it went down and then kind of bounced back up, I think that really shows how we're still in an uncertain time and how we're still maybe still headed for kind of that bull market. But I don't know. I think that's some interesting things to take a look at.
Yeah, overall, I think there's a lot of uncertainty in the markets. We've seen that it's been very choppy, and choppiness is when the market goes up and when the market goes down, and it does not decide where it wants to go overall. And it stays in sort of a zone, and it stays there for a while. And that's where the markets have been, like, for the past months, not weeks, but over a long period of time. It hasn't decided where it wants to go. And I think that'll be resolved in a year's time. I think the market will decide where it wants to go eventually. But it does show that there's a lot of strength in these buyers, that even with the uncertainty of war and nobody knows where this thing's going to go, that the buyers are still willing to buy in and buy up that dip. And I think that shows a lot of strength in the bulls.
Yeah. Yeah, there's so much out there to, look at when you look at, something as impactful and significant as a war. Looking at what that's going to do not only to the countries that are engaged in that, but you look at kind of the oil from Iran as well as Iraq and that whole region. A lot of that is being shipped to not only the neighboring countries but also to countries like to China, to the U.S., to Russia, and seeing how that affects kind of us on a global scale. I think is something to really pay attention towards. Obviously, war and everything right now going on, it's not a good thing, but it's also important to see what underlying factors are at play in a situation like this.
Yeah, obviously, stuff in the Middle East, it's always going to impact oil prices. We saw crude oil, it was up about 7% after the news on Sunday night. And even with Venezuela as well, the news with Venezuela after we captured Maduro, that really spiked oil prices. And there was thoughts that maybe the U.S. is going to go in, perform an operation, and the whole idea is that they want to take the oil. I mean, that's definitely a possibility, but that's not something that the government's ever going to reveal to us. It's getting skeptical too. But, yeah, I think a lot of it has to do with oil, and oil prices are definitely going to be impacted. We saw gas prices rise this weekend, and on Monday they rose significantly just because people get fearful and they want to go and buy a ton of gas. So obviously the prices are going to go up because the demand's much higher. So that's one of the impacts we've already seen so far with oil. You have any other thoughts on that?
Yeah, I think oil is going to be a big thing to take a look at. Recently, we were just coming out of this silver craze that went from 77 all the way up to 110 or whatever, and came right back down. And market moves like that really show that nothing is really locked in place, and there's a lot more speculation than investing, I think, happening and taking place. And I'm very curious to see where oil is going to fall into that category as well. Seeing where in the markets, how do we diversify enough? How do we take risk off? And especially as uncertainty may grow throughout the rest of 26, I think it's important to really maintain the risk off strategy coming into that. And also looking at, how would someone like this make sense of this world being so confusing, whether they're new to investing or, whether they may be younger or whether they are trading on, one side of it, but they're trying to understand the other side. I think there's so many different tools and resources to help you build that knowledge. I know speaking here at, Grand Canyon, we have a lot of different tools for that as well. But I think even just, opening up some news apps, looking at that, understanding kind of the basics that go into making a company function and operate well, as well as looking at, just how impactful, people on the internet can be. I mean, you'll have CEOs come out saying one thing about the company, and the next day it'll fluctuate. Kind of like I mentioned earlier with a lot of these new AI agents coming out, a article or a tweet about them will get posted, and then immediately the next day you have cybersecurity funds dropping around 30%. And I think that that volatility is, it really goes to show that fundamental or even technical analysis maybe need a real reevaluation coming up soon. Still using them, but also seeing how we can incorporate different strategies into that as well.
Yeah, and I think a big factor of that too is right now I think we see a lot more retail traders getting into the markets. And I think institutions, I think they're having a hard time with that because retail traders typically like to trade off of news and whatever they see and technical analysis as well. And I think that's playing a big factor in some of the volatility and some of the new traders getting involved in the market. I think the retail traders are going to take over.
Totally agree. Yeah. On that note, I think looking into the future, that passive investing is going to keep growing as more retail traders come in.
Yeah.
As well as also seeing, where is the support systems for them. You have financial advisement growing. You have all these different industries starting to move towards that. As well as you also have the M&A market looking like it's going to be a very, very high volume year for them as well. So seeing where kind of retail traders fall into that scope of involvement, right? Where are they going to be plugging their money in? Who are they going to be putting their money with? I think there's a lot of opportunities coming in, especially this summer.
Yeah, and I think one of the interesting things too, on Webull, I know they do this. I don't know about other platforms, but they have AI advisors now that they've started rolling out. I think it's just a work in progress right now, but you are able to put money into it. So basically what it is, it's like a financial advisor, but it's AI. And you tell it your strategy, you tell it where you want your money to go, what you want it to do in the future, and it puts your money into equities, it puts it into the S&P, it puts it into whatever fits that narrative. So it's pretty cool what AI has been able to do in that case, but it's crazy.
No, totally agree. I think the advisement space is huge. You have so many people now to where I think they're starting to recognize that intelligence and information is commoditized now. You can go to any LLM and ask any question about anything, and you can almost get a better answer than a professor at a university. And that brings up the question. It's like, well, how do we incorporate this in our daily lives? How do we incorporate this in our workflow? And more so, how do we use this in a way that's going to be beneficial not only to us, but also beneficial to the kingdom at the end of the day? I love it.
Anything else?
Anything else? I'm good. Yeah.
All right. Well, that concludes your daily market recap. Thank you, everybody, for tuning in.
Thank you so much.